First, we start with breaking economic data just coming out. The Federal Reserve's preferred indicator for inflation, that is the US Personal Consumption Expenditure Index, PCEI, the latest numbers just coming out. Remember, at the last summary of economic projections, that was in June, the Fed then raised the 2025 median PCEI to 3.0%. That's their estimate, from 2.7% to later come down to 2.1% by 2027. Indeed, almost all the July US personal consumption expenditure data came in as expected. The annual core PCEI for July was up 2.9% from 2.8% as expected, while the headline year-on-year core increase PCEI was up 2.6%, no change from last month, and also as expected. Month-on-month core PCEI was up 0.3%, again as expected. The data reinforces somewhat the dovish Powell pivot, raising the odds of a 25 basis points cut by the Federal Open Market Committee. That's in September. Notably, Fed Governor Christopher Waller reiterated his support for a cut in a speech yesterday, also adding that he would entertain a larger move if labor market data continue to weaken. Also, on data coming in today, German inflation rose by a higher than expected 2.1% in August from 2% in July 2025. This was also above the 2.0% consensus for the month. Hello, this is Global Business Insights, where we try and make some sense out of the context by sharing insights and thoughts on what the data is saying and how developments affect business all over the world. The European Commission yesterday removed duties on imported US industrial goods in return for reduced US tariffs on European cars, a key part of the trade agreement the EU and the US struck last month. This was the EU's first step in enacting the framework agreement between US President Trump and European Commission President Ursula von der Leyen. That was on July 27, with the EU accepting a broad 15% tariff to avoid a damaging trade war. And still on trade, the US will begin implementing new tariffs on small packages from around the world from today. This ends a loophole that has allowed billions of dollars of goods to enter the country duty-free. President Donald Trump announced earlier this summer that he would eliminate a tariff waiver that allowed goods worth less than $800 to enter the US duty-free. All packages entering the country will now be subject to tariffs regardless of their value. Intel confirmed that it received $5.7 billion in cash. That was on Wednesday as part of the deal Trump negotiated for a 10% stake in the struggling chip maker. Intel is separating its contract chip manufacturing arm or foundry from its design business. Intel previously said it could take outside investment in the foundry unit, having created a separate management board to govern it. The government's stake in Intel is said to be an incentive to discourage Intel from selling its contract manufacturing or foundry business, seen as strategic by the United States government. US stocks closed in the positive, with S&P 500 scoring another record close, but artificial intelligence tech giant Nvidia closed slightly lower, though pairing previous day losses. The impact of China making it difficult for Nvidia, complicated by the Sino-US trade war, continues to be a lingering issue, though the numbers continue to also affirm the artificial intelligence boom. Nvidia reported Q2 results that beat Wall Street's estimates, with strong revenue growth of 56% year-on-year. But data center revenue came in slightly under estimates, and overall revenue guidance for the third quarter just slightly above estimates of $53.1 billion, despite assuming no H20 chip sales to China. and that is seen as impressive. The possibility of a deal with China or with the US or both implies revenue this quarter coming in much better than forecast. The core growth outside China is looking strong, and Saudi Arabia this week said they want to be the number 3 artificial intelligence player after the US and China, and they are expected to have invested heavily in infrastructure provided by Nvidia. We also expect pickup of revenues from Western allies, including Europe, who will say it as unthinkable to be locked into the Chinese AI ecosystem. That means business could be good for a long while. There really aren't many alternatives. It's either you go with the Chinese or you go with Nvidia. But Nvidia's first mover advantage is not sustainable, and markets know we are still at the early stages in the AI business development trajectory. A lot can still change in terms of ultimate winners and losers. This is also the time when analysts need to really know what is going on, especially the dynamics in terms of technology trends and what players are doing. Having said that, the more savvy semiconductor analysts are bullish about Nvidia, seeing even greater upside for the chip maker. But more than a few also think Nvidia could easily be a victim of unrealistic expectations and an overhyped sentiment, and are pulling back, albeit very cautiously. The latest Nvidia guidance disappointed many investors used to blow out numbers, though the numbers still were over Wall Street expectations. When you compare AI in its first 5 years to the internet or the e-commerce business, which is over 20 years old, you understand that a lot is still going to change in the AI business, and analysts who misread the dynamics, and they will be doing so at their own peril. The noise related to the mechanics from China should not drown the far more important issue of understanding developments on new advancements and the faster AI technology assimilation and what is driving it. Still on tech players, Dell Technologies reported Q2 results yesterday, beating expectations for both sales and revenue. The performance was due to strong growth in its AI server business. Dell now plans to ship $20 billion of AI servers. That's in fiscal year 2026, double what it sold last year. The US economy grew at an even faster than thought pace in Q2 as consumers and businesses showed resilience despite tariff volatility. Q2 GDP was up 3.3%. That's annualized pace, better than an initial 3.0% estimate. Many continue also to accelerate transactions and orders ahead of impending tariffs, with also consumer spending rising by 1.6% compared to an initial 1.4% estimate. Still, in the US, the number of Americans filing new applications last week or jobless benefits decreased by 5,000 to 229,000. Also, we are seeing the coolness in hiring, possibly raising the unemployment rate to 4.3% in August. More on the drama playing out at the U.S. Federal Reserve. Federal Reserve Governor Lisa Cook has sued to block President Trump's recent move to dismiss her, setting up a potential unprecedented legal showdown between the White House and the central bank. At stake is the credibility and the independence of the Federal Reserve, even as Treasury Secretary Scott Bessent has made no secret of an intention to review all Federal Reserve processes and restructure operations to be more fit for purpose. Many analysts do not see much changing, even with Lisa Cook replaced or a more dovish majority FOMC, given the institutional layers that are still well staffed to protect the status quo order. Markets, however, are convinced, whatever happens, that we will get a September rate cut, except we also get a blowout upside on inflation and are not paying as much attention, knowing that this fight is likely to reach the US Supreme Court. A hearing has been scheduled for today to review Cook's request for an emergency temporary restraining order. Along with Trump, Fed Chair Powell and the Board of Governors at the Fed are also named as defendants to stop them from moving to effectuate President Trump's purported termination. Even if Lisa Cook wins, enough mud in this case and previously would have been thrown at the credibility of the Federal Reserve to perhaps justify what Besant is touting as an impending strategic reorganization. And of course, we could get more uncertainty looming, even as we gather a competitive and rigorous search is underway to appoint the next Fed chair. Prime Minister Abiy Ahmed of Ethiopia confirmed signature of an agreement with Nigeria's Dangote Group to build a $2.5 billion fertilizer manufacturing plant. The investment is part of Nigerian billionaire Aliko Dangote's efforts to end Africa's fertilizer imports. And in South Africa, President Cyril Ramaphosa yesterday launched a G20 experts task force to examine global wealth inequality and its impact on growth, poverty, and multilateralism, the first initiative of its kind for the G20. The 6-member task force, chaired by Nobel Economics Prize laureate Joseph Stiglitz, will present its findings to G20 leaders when they convene in Johannesburg in November. The group chief executive of the Nigerian National Petroleum Company Limited, Engr Bayo Ojulari, says the company is facing coordinated attacks from interests opposed to its ongoing transformation agenda. He said this yesterday while hosting a delegation from the national leadership of the Petroleum and Natural Gas Senior Staff Association of Nigeria. That was at the NNPC Towers in Abuja. He also explained that NNPC is going back to the baseline to ensure the refineries work sustainably, adding that the refineries will not be treated with a quick fix approach. The view of Emerging Value Insight is that NNPCL will be under far less pressure from interest groups if it's properly listed, with far less government equity, and shareholders were mainly local and international investors and technical partners driven by value and returns. The fact that you continue to see these interests working against NNPCL transformation efforts means governance hasn't really significantly improved in the commercialized model, which still has 100% government ownership. And Nigeria's Minister of Communications, Innovation and Digital Economy, Bosun Tijani, has earned global recognition by making the 2025 TIME100 AI list alongside tech leaders like Elon Musk, Sam Altman, and Mark Zuckerberg. This definitely reaffirms the weight and savvy of the current minister, which speaks positively for immense possibilities in Nigeria's technology and innovation ecosystem. Asia-Pacific stock markets were mixed as investors also assess a slate of economic data in the region, including Tokyo core consumer prices, which rose at a slower pace in August. The headline Tokyo Consumer Price Index for August rose 2.6% year-on-year as compared to 2.9% in the previous month. Additionally, Tokyo CPI ex fresh food climbed 2.5% year-on-year in August against 2.5% expected and down from 2.9% in the prior month. Well, that's all we can take on this episode of Global Business Insights. This is Bode Oshosami. Enjoy the weekend. Thanks for watching. Bye-bye.